Hello, everybody. I'm your host, Eric Bird, here at StopStrugglingNow.com. And today, we're going to talk about what happens when the stock market goes down. Do you have any moves to make? Of course we do. One percenters don't lose. Remember that. First up, tvxy Optics. Check. Stop Struggling Now gear. Check. And welcome. And please like, subscribe, and click the bell below so you get the latest updates. Now, let's get to it. All right, welcome back. Well, before we get into this discussion on what to do when the stock market goes down, I'm just here at a smog shop here in California. You have to get vehicles smogged whenever DMV deems it necessary. And I got the call this time, and I can't just go to a normal smog shop that only costs like $30. I have to go to a Gold Star smog shop, which is twice as much, which is 60 bucks as it turns out. Some go as high as 75, 80, 90, and they're supposedly more stringent when they check your car. This is how they siphon off your wealth, ladies and gentlemen. So without further ado, we're going to go onto the computer screen and we're going to talk about this. What do you do when stock market goes down? We have options. As you can see, we're on the Stop Struggling Now YouTube channel. And I just want to point out we have a nice join button over there. And today the stock market went down over 1,800 points. And because there are members, they get under the community tab, members receive, I can send them special messages. And this morning I sent special messages to let them know that when the stock market goes down, you should buy the stocks that I'm talking about, uvxy, tvix, and things like that. And that's what we're going to talk about today. But before I get into that, I'm going to give you all a little bit of nugget of something else. The nugget is, you see what's behind me. Assets. Assets can be paintings, sculptures, artwork, could be assets. And I'm actually going to cut and put in a picture, a painting, and I'm going to see if anybody knows who the artist is and if it's valuable when I do the editing. So you'll see it come up right now. So let me know down below in the comments. So we'll get back to stocks, which are also assets. So a lot of you are probably wondering, how do you get this information sometimes where people are saying the stock market's gonna open tomorrow up or down? And a lot of people know how to find this, but you got to up your game. That's what we're talking about here. If you want to be a one percenter, you have to up your game and be into the one percenters arena, the top 10 percenters arena. So you have to get a little bit uncomfortable and learn a few more things. But I'm going to make this easy for you. So here's what you can do. So today, stock market went down. I'll show right here. This is the Dow Jones. It lost 1,861 points, which is 6.9%. That's going to be a significant number later on. But here's what I do. You can do a simple thing. I'll leave a link down below where you can actually go see the CNN pre-market data. So as you can see, 9:06 p.m. Eastern Time, the Dow is scheduled to be up 77 points. Nasdaq 1.25. These aren't even percentages. This is just 6.25, which is basically 0.21%, 0.00. This could change during the course of the evening because it's based on futures. There's futures trading going on as you sleep. So people are betting higher or lower what the market's going to do, and that's how they can predict what's going to happen tomorrow. So as of right now, it looks like there might be a, just call it break even. 77 isn't enough for the Dow. The Nasdaq at 1.25, not enough. 6 point. This could change. Earlier today, they were up each were up about another 50%. So as time has gone on, they started coming back down. And then tomorrow morning, you might see it, whether it's negative or positive. Then you will know generally how the market's going to react when it opens officially at 9:30 a.m. But some of you may have downloaded Robinhood already and Webull, and you might have noticed something called extended hours. And the market might be open for some of you at 4 a.m. Pacific, 7 a.m. Eastern, and you could be doing trades. So in other words, when I posted this morning that when the stock market goes down, you should buy tvix, vixy, spxs, things like that, and I posted it up, I specifically remember tvix was at $138 per share. And I'm going to skip ahead and show you that tvix ended today at 201. This is at 4 p.m. Eastern time. It was 201.95, and then after hours it has dropped back to 196.42. But if you were a member and got that and acted upon this information, you might have bought tvix at 140. It might have risen to 200, and as you can see here, 60% on your money in less than 12 hours is pretty good, ladies and gentlemen. This is how some of the one percenters win, simply by just knowing this. They're not doing anything special. It's not hard, but it is a little gamble because you're thinking that the market's supposed to go up based on the pre-market environment, and it sure did. It started at 1, and in fact, I don't have an account where I can trade at 12 midnight. tvix was at like a 125, I think, from the previous day. It was down there pretty low. So when I saw what was happening in the overnight futures, I was like, man, wish I could buy something right now. But then when I woke up, it was already at 130, 135, somewhere in there. So that's the only way I could take advantage of around, I think I got it at 139 actually by the time I got around to it, because I posted something up first and then I went and got it. So I think it was 139. So needless to say, short term, because all of these are volatile. Like tomorrow, right as of right now, the market's supposed to go up. So therefore, that's why you see an overnight that it has slid back a little to 196, 194.75 as of 7:55 p.m. I don't know if that's that's Eastern time. So around 8 p.m. Eastern time, it's down to 194. By this time tomorrow morning, it could be down to 180 if the futures keep saying that the market's going to rise tomorrow. So if you didn't sell and happy with 195, happy with 200 before 4 p.m., then now you can still sell right now, maybe, depending on which brokerage account you have. So otherwise, you have to wait till 7 a.m. in the morning, and hopefully it doesn't go down. Well, even if it did go down another 5%, 180 from 139 or 140 is still $40 per share on your money. Where you're going to get that? Now, quite frankly, I need to talk about something because everybody thinks this is a buy and sell, but there's taxes involved. So Curtis Davis was kind enough on the live stream, in case you missed it a few days ago, he brought it up, and I never have, about the implications for taxes. It's based on your income. So I'll get to a chart here shortly because I want you to understand long term. Here we go. Long term, this is from Investopia. I'll have a link down below, and you can go to the financial information page on StopStrugglingNow.com, and you can get it there as well. But long term is when you buy a share of stock and you hold it for 1 year or more. There's different tax implications. In other words, your tax is lower when you buy and hold long term, which is basically what you should be doing anyhow. You shouldn't be trying to time the market, doing all this, that, and the other. The stock market went down today. Are you buying? You should have been buying. If you're committed, I made a post today about how committed are you to your future. You should commit. You should be going, okay. Like for instance, when we were talking about that Dave and Buster's, when the a YouTuber who came out and mentioned it. It went down from $19 to $14 today. I don't know what it closed at, but did you buy more at 14, which you should have done? Because now your dollar cost averaging has reduced from 19 down to, if you bought at 14, what is that, $5 difference? So now you're at $16.50 is what your average cost is on your stock. So now, as soon as it gets up to $16.50 or more, you're ahead of the game. That's what you do, dollar cost averaging on the way down. And if you're committed, you have to buy more shares. And today I bought more shares of stock. Remember that duffel bag of cash. Now, back to this long term. Long term is anything over a year that you hold on to the stock. Then when you sell it, you're going to be taxed at a lower rate. Short term is anything from 0 day to 365 days. Anything you sell before 1 year, that is called short-term capital gains, as long as it's a winner. So in other words, let's reverse this with the play. Let's reverse this all together. Whoever saw me crowing in the last video where I was standing outside of Dave & Buster's, and I said, hey, this might be a good time to buy the stock. It went to, it was around $7.76. If you missed that video, check it out. It's the last video, the newest video. It was just last. $7.76, I believe it was, on the day. March, it was either March 18th or March 20th. I don't know the date. Now, if you would have held the stock and sold it at the $19 level, you would have made $12 per share. You would now have a short-term capital gains because you would have sold it before a year. So therefore, you would have had to pay, depending on your income, and I'll show you a chart right here, and you, like I said, there'll be a link down below so you can go see what I'm talking about. But here's what would have happened. This is the short term. So this makes it easy for you. If this is your income up to 9,700, most people at this level right here may not be investing in stocks, but if you were, then you would owe 10% on your profit. Okay, so we're talking about, let's say 776, it went up to 19, so that's 12. Let's just keep it easy. Let's call it $11. $11, let's say you had 10 shares, that's $110. You would owe, theoretically, 10% of that, $11, to the IRS as a capital gains if you're single. Now, this goes up according to, now 60% of the population falls in this category who makes under $40,000 a year. You would have paid 12%. So basically you're all going to pay like $13. That's it. Now, 30 to 40% of the population, well, about 30% of the population falls in this 39,000 to 84,000 category single, and you would have been paying 22 cents, which means you would have paid $22. All right? So here's your tax implications. Now, of course, if you're married, then your numbers go up. Filing jointly, your numbers go up. So you would have had to you could have made $20,000 married, and you would have paid 10%, and then 12% in the next bucket where you're at 19,000 to 78,000. So these are the basics I'm trying to give you so you understand the tax implications when you're doing this buy and sell. When people are saying they're doing day trading, this is the kind of thing that comes up when you say, hey, let's say they say I made $1 million. A lot of people make these claims. I made 500,000. I made $1 million. What they don't tell you is potentially they fall in this 35% tax bracket. So when they say I may have traded and gotten 35,000, they're gonna, $1 million, they're gonna owe 650,000 to the IRS. And I'm not saying this is absolute, because there's other ways that you can actually go down, but I'm just giving you a basic broad idea of what you need to expect when you're buying and selling stocks on a short-term basis, because I have been saying buy and sell on a short-term basis, because that play stock I actually sold before it got to 19, because I bought it at even lower than $7.76. But that's when I started talking about stocks, because I generally didn't want to talk about stocks because the stock market is kind of up and down, and you need it to be stable. And I don't want anybody really get hurt by this. But you have to invest in yourself, and you have to believe, and you have to commit. So this is going to end up being a longer video than I thought I was going to do. Now, as you can see here, I'm going to go to the long term. And under long term, you can see where 60% of the population, because you make less than $40,000 a year, you could pay 0% if you held the stock for 1 year. So in other words, when I mentioned AT&T, Wells Fargo Bank, which is WFC, I'm holding those for a long time, almost forever, because they give me like almost 10% on my money because they're issuing dividends. So I just got a WFC dividend notice also. These are the kind of things, if you hold it over a year, then you can see it's a higher number. Jointly married, 78,000. Single, 40,000. So now you're falling into 60% of people would fall in that category. The other 90% of the people fall in this category where you would only pay 15% on capital gains. We'll discuss losses later, but only on the gains do you pay this. So if you lost money and you sold, you're not going to owe anything. All right? But there's other tax consequences and things to deal with on that. And just wanted to let you know. So let's get down to it. Today, Dow Jones Industrial Average went down 1,800 points, the most amount since March. If it didn't happen in March, this would be like a record. But because things have been so volatile and crazy, this is not a record right now. March is a record. But because it went down 6.9%. Again, remember this number. Standard & Poor went down 5.89%. And notice Nasdaq went down 5.27%. So we're talking about 6.9 to 5.27%. The three top indexes went down. Now, look at what happened with the stocks when you're talking about the velocity stocks. Watch what happens. tvix, as I mentioned, when this opened today at 9:30 a.m., so you can see tvix was already at 148. If you would have been at Robinhood or Webull pre-market, you could have bought at 130s. Okay? So now you would have profited even more. That's what I'm talking about that pre-market. A little hack. A little one percenter information. So let's say you bought it at 148 in the morning at 9:30 a.m. when the market opened, and then let's say you sold right before the market closed. You still would have received 35% on your money. Okay? Now, totally, if you would have sold, well, you would have had to sell at 4 p.m. even, you would have gotten 65.82% on your money. I'm hoping I'm illustrating this. You understand, this only went down 6.9%, but you could have received 65% on your money in less than 12 hours. 9 hours, to be exact. Not even exact, but 9 hours. So I'm just trying to show you the significance of paying attention when the market goes down. You can make money. I'm not showing you how to do puts and calls and this other genre that they have going on in stock trading. That's a little more, let's call it, you need to be not at work. Let's just put it that way. All right? Because with stocks, you can put a stop, you can tell it to sell when it reaches a certain price, whether it's a lower price or a higher price. So you could have went to work and said, hey, I bought this at 138. When it gets up to you could put 195 sell. You could tell it. You could say 150 sell if you're happy with 20% on your money. But just giving you an idea of what you can do. Now, next one up, tvix is the most volatile. Vixy, least volatile in my opinion. But as you can see, it did 47% between 9:30 a.m. and 4 p.m. Eastern time today. So again, you would have picked VIX, you would have been good with that as well. Let's go to the other one, which is the second variable, in my opinion, but uvxy, you can see did 50% on your money in less than 1 day. And as you can see, this gray line here, that actually is what's happening after hours right now. And the reason why it dipped a little bit, you can attribute it to because this is showing positive, and hey, look at here, it updated 168 positive now, which is 0.67% on Dow. Nasdaq 35.5 points, which is 0.37%. So you can see this is why those velocity stocks started going down, because it's showing tomorrow that the stock market might be up a little here or there, and who knows what's going to happen by the time 7 a.m. in the morning occurs. But that just gives you an idea. Let's go to Standard & Poor. And this is actually a bear. So the spxs bear down. So you will notice something very interesting. It rose up to here 869, and now after hours it had this little flip up to 870 again, because it's supposed to, when the stock market goes down, this goes up. But remember an hour ago or 20 minutes ago, whenever that time was, it showed that it was back to almost zero. And that's what this is showing right here at 8 p.m. It started flipping back up because it was going back to the same amount as this, as it closed today. So that's just giving you an idea right there of how this is volatile and how quickly. And if this was able to go out till 9 p.m., you'll see this going back down, since we just showed it. The Dow, or the Standard & Poor over here, is going up. Well, it's still 0.1750. 0.58 is still almost even. So that's why it's almost even in after hours right now. So, all right, let's go with Standard & Poor again. This is a different one, but notice they went up 17% today. So again, if you'd have bought at the beginning at 9:30 a.m., sold around 4 p.m., you would have received 17% on your money. All right, and depending on which tax category you're in, then you would have to pay a percentage, whether it's 0, 10%, 25%, I don't remember the numbers, 15%, 22%, 10%, 12%, 22%, 24%, and so 35% on their money. Now let's go to the Nasdaq. And as you can see, we're talking about sqqq. There's others, but this went up 15%. So 3 times the Nasdaq, as the Nasdaq went down. So Nasdaq went down 5.27, sqqq went up 15%. So 5.27% versus 15% is almost 3 times the margin that it went up. So is that enough on your money in 1 day? Kind of. Wherever there's profit, I can't disagree. There's a lot of people that talk about don't take it, do take it. I'm just like, whenever it's profit, it's hard not to take the money. And then it's hard not to let it sit and go long term. And long term stocks are things like Apple, Microsoft, bank stocks, mobile phone companies that give out dividend stocks. Even Verizon is a good one. Like I said, AT&T, cable companies, I like Charter, CTL, for instance. Hey, that's a tip for you. CTL, because at their price point right now, you're almost getting 9%, somewhere between 9% and 10% on your money. Wells Fargo Bank, because it went down today, something else I purchased today, now I'm getting 8% again on my money. Because I bought when it was down around 23, I think it was, I'm getting 10% on my previous money. So now I'm still going to be getting somewhere between 8 to 10% on my money, and I'm keeping it in Wells Fargo. I'm keeping it in AT&T. I'm keeping it in Apple. I'm keeping it in Microsoft. I'm keeping it in these type of stocks, okay? Because it's a long term. Now, that is pretty much all I had to say today. I just wanted to get you guys up to speed so that way you know what's happening when the stock market goes up, everybody can win. When the stock market goes down, people panic. But now you know, keep a little bit of money on the side and you don't have to panic. Because then you can say, okay, I'll buy some of these. I might have to sell some of my other stock, or you're going to hold your other stock and you have that duffel bag of cash still. You haven't used all of your cash and you're loading money onto the platforms, whether it's Robinhood or Webull, E-Trade, Fidelity, whatever your brokerage account, TD, Ameritrade, whatever. You're loading money up there and you're buying more shares of something. So today you could have made anywhere from a tvix 65%, vixy at 47, spxs at 17, uvxy at 50%, spxu at 17%, and sqqq at 15%. And there are other velocity stocks that may have outperformed these, although I doubt if anybody outperformed tvix. But you still could earn this on a today basis, not an everyday basis, but today when the stock market does these dips and you already know it's going to happen, then you could take advantage and earn 10, 15, 20, as you can see the percentages for one day. And the stock market could be going down in the future because, as you know, I did a cost average where 27,000 is roughly where, if you're a 1%er, you get your money back. Because if you would have bought when the Dow, I'm using the Dow when it dropped to 19, 20,000, and when, well, under 19, when it was at 19, 29 to 19 is a 5.5. So you needed it to get to 25,000 to break even theoretically. People want to make profits, so it has to get to 27 where they're feeling good about themselves, where they get all their money back, plus they made a profit. Now they can pull the plug, and maybe we have what we had today, where people are taking their profits and riding off into the sunset, and by selling, that's why the stock markets and indices went down. Hopefully I'm educating you a little bit on this, and we're creating a little wealth for you. So stay tuned. We're going to have some more. And with all that said, thank you for watching. Thank you for listening. And please like, subscribe, and click the bell below so you get the latest updates. And I know it's hard out here. That's why I've been talking about stocks for the last 2 to 3 months with impunity. I've been trying to give you some stock options that can help you make money. And so far, the majority have been great. And what I've done is I added one share under a paper trading on Webull, just so I'm going to be able to, in the future, let you guys know what happened on these stocks. So then that way I can always run it and say, hey, you know what? We're up 10%, we're up 15%, we're up 30% overall if you're following what I do. But again, I'm not a financial guru, I'm not a financial planner, I'm not involved with financial anything, but I'm just an OC, ordinary citizen who likes to make money. So hopefully more of you will join in and create your wealth, your generational wealth, because as long as you hold on to some of these blue chip stocks, as we call it, this could be generational. And all you have to do is put money, just like you would a 401k mutual fund, 50, 100, 1,000, 800, whatever you want to put a month towards buying some stocks. And once you do dollar cost averaging, then you keep it pretty much where you want it. Your investment stays there. And as long as the company doesn't go out of business, and hopefully they're issuing dividends or their stock is going up, appreciating as they call it, it's a win-win. Time is on your side. You can do it no matter what your age, even if you're 50, even if you're 60. People, I say this so often. If you're 60 years old, and if you grew up in the last 20 years, 30 years, which most people did that are 60 years old, then they probably are on a workout plan. They probably are on a diet plan of some sort. So people are going to live a lot longer than they used to live. So if you're 60, you're still going to live probably another 20 to 30 years. So don't think it's over. And you people who retired already, don't think because you have $1 million in your retirement fund that that's going to be enough. You may not be accounting for inflation. So hopefully you have a way to keep having income coming in. And you might be in that insurance plan, I don't know, or you might just have it in the stock market where you have dividends coming in. And that would be a good thing, because if you do the math, if you live 20 years past your retirement, are you really going to be able to live on $50,000 a year in 10 years, or 5 years for that matter? Because even right now, $50,000 a year, which is going to be taxed when you take it out, people don't realize this, so you might only really receive 40,000 of it. So are you going to be able to live off of 40,000 a year? I know if you have a mortgage, highly unlikely. If you do have a mortgage and you need to, and you want to travel and do things like that, you are not going to be able to live off of 40,000 a year. Cost of living is going to increase way higher than your 40,000 per year. Because I know for a fact I used to make $40,000 a year in the mid 1980s. That is the equivalent of $80,000 right now in 2020 money. So just giving you an idea what can happen in 20 years later. $40,000 could be worth 20, and you're not going to be able to live on that. So anyhow, keep your head up, keep moving, and I'm out.